Coming in, we have Dipan Mehta from Elixir Equities now. Let's carry the conversation forward, particularly on the capital market stocks. Then we'll get to the rest of the market. Dipan, morning. So I was asking Sandeep just this. Have they managed to keep everyone happy or no? And Sandeep was saying not really, because of brokers, ultimately you'll get less from mutual funds. But at least it's not as bad as that much feared 2 basis points, right? What would you expect? AMC stocks, wealth management, broking stocks. Do you think there'll be some sort of a relief rally today? And then, are you buying anything or holding anything in this space?
Good morning, Surbi, and thank you for having me on your show. Yeah, I think that it is going to be mildly negative, but much better than what the street was expecting. But, end of the day, the mutual fund companies, the AMC listed ones, their play is more in terms of how much fresh AUM they are able to raise from new customers and how the SIP sustains. And of course, as a mutual fund, you always get the benefit of the appreciation in your portfolio or the AUM, which comes naturally year after year. So the cut in TER is not going to be that much of an effect, and it will get neutralized or marginalized over the next 2-3 quarters or so. Cut in brokerage doesn't affect them at all, and I don't think any institutional broker listed. So from that point of view, you don't have to have any concerns over there. But end of the day, I think it's a great industry, the AMC industry, and it's a nice annuity-based business, and especially the top 2-3 mutual funds. They have got very strong position in the market, and they keeping on raising their market share, like we saw in case of ICICI Pru AMC also. So very positive on the business per se, and it's nice steady cash flow business. So, and I don't think these developments are going to impact too much the prospects of this particular industry group.
Okay, so not very disruptive, manageable, especially for the large AMCs, and many of them are also moving more towards advisory, rather than the pure commission, which also helps with the profitability. But maybe some of the smaller brokerages will feel the pressure. Dipan, quick comment. TCS, were you, anyone in your team, part of the analyst day? And are you happy? I mean, how do you feel that they finally come out and said $1.5 billion of AI revenue? I mean, is that number adequate? Is that something that you had in mind? 5% of the overall revenues coming for TCS coming in from AI. Was your own expectation higher? But it's a start in terms of disclosures.
Yeah, Rima, first of all, we have stopped tracking TCS so closely for a long time. And, unless these large cap technology companies can demonstrate significantly higher growth rates on a sustainable basis, I don't think that, a lot of funds, or at least we are going to track it that closely. There could be a strong trading rally in IT stocks. I completely, figure that may happen because of rupee depreciation, because of base effect. And also, I think that some amount of revenue flows will start coming through from all the contracts that they have won. But end of the day, I think in my 30 years, I haven't seen such a major technology trend hardly having any effect on the revenues and profits of the IT services industry. So that's a bit disappointing. I would say valuations are reasonable, but then growth rates also have come off. So at this point of time, my assessment is that to remain invested in the software services companies and wait for a nice bounce, which may take place maybe this quarter, next quarter or so. But I don't think that these are great long-term growth stories which can create a lot of wealth from these levels. At best, they can protect your wealth or give you market returns also.
Dipan, are you looking to play the CV cycle? Is there a recovery afoot? Because these recoveries generally last for a few years, the cycle. Are we at the beginning of it? And which would be the best way to play it, if at all?
Rima, I think these are great cyclical businesses, and the fact that CV industry is doing well, you can then assume that basically industry manufacturing also is doing well, and so is infra. And our preference would be for Ashok Leyland, which has been steadily able to increase market share, and they have a great export potential as well. And in terms of new launches also, I think they are perhaps ahead of the curve, reasonable valuations as well. So I think within the auto industry, this is one segment that one should remain overweight in. Least amount of threat in terms of electrification or even fresh competition coming in from overseas players who are starting businesses over here, which is the case in the passenger vehicle industry. And on the whole, I think lower financing, lower interest costs will certainly benefit the cycle even more, because you will have more and more replacement of old vehicles. So very positive on the CV industry. And I think one can be overweight on both companies, Tata CV as well as Ashok Leyland, but just Ashok Leyland is a better preference because of good track record.
Correct. All right. Hi, Dipan. Morning. And good to see you in. Dipan, I wanted to ask you, what about Ola? There was a lot of excitement on the stock. Stock went dancing away, actually. And now it's at a 52-week low. And last couple of trading sessions, promoters selling stake. What's your view at 32 rupees?
Yeah, I think it's been the biggest disappointment in the IPO market. And we've always been negative on Ola at various points of time, but I don't know, that they don't seem to be getting the market share which we thought and the street thought they would be able to get. In fact, traditional players like TVS, Bajaj Auto, they're able to get higher market share than Ola, despite being, a standalone, dedicated EV producer of two-wheelers. And on the whole, what has also happened is that because of these GST cuts, the incentive for owning an two-wheeler EV, that price gap has reduced. So that's affected the demand as well. So I would just pass Ola Electric at this point of time. Let us wait and watch and see how they're able to regain the market share and then maybe look at the stock in fresh light. But right now, I think even at these levels, there's no point bottom fishing, that's for sure. But if you're already holding the stock, I think the time to sell is gone. You just remain invested for a longer period of time and see how the company shapes up, or then look for exit opportunities.
Okay, so wary of Ola Electric, got that. Dipan, Meesho, I don't even know what to ask you. 111 to 200 something in a matter of, I think, 5-6 trading sessions since the listing. There's Zepto coming next week. And in the midst of all of this, we've seen the actual, the big listed boys, Eternal particularly, it's lost a fair amount of ground in the last couple of weeks. What is your advice on this whole space?
No, Surbhi. Meesho is very different from Eternal and all these Zepto and all of these companies. Meesho is more like Amazon and Flipkart. And because these two companies are unlisted, I think investors have flocked to Meesho, which of course is the largest online marketplace as well. And I was very positive on the IPO, but I did not expect.
Okay, I think we've just lost that line. We'll try and get Dipan back a little bit. But this whole new age company space, he was making the point of course, they're very, very different business models, Meesho and Eternal, very different outlook as well. But in general, this whole space of consumer technology companies, it's just seen a hectic amount of action. I think Dipan, just complete that point. And I was not drawing exact comparable in terms of the business models. I just meant to say this whole consumer tech space. And the e-commerce space, that's just seeing so much of action. But yeah, you were telling us about Meesho, and then now what to do with this kind of a rally. If someone got in anywhere between 100 and 140, should they be selling now? Because UBS yesterday put out a price target 220. The stock is almost already there. So should you cash in? Should you buy more? Should you wait for a dip? What do you do?
I think Surbhi, you remain invested, and there could be a correction, because this is initial listing. There's a lot of pop and a lot of frenzy around new listings, but it's a great long-term story, and I wouldn't want to sell off just because the price has rallied like this.